Well, hello, everyone. It's Shooter. I'm back. Welcome to Weekend Box Scores Primary Waves Edition. Of course, please review our disclosures at the end of this presentation. Let's jump right into this. Okay, this week, what we want to focus on is what to hold. And really the only thing that looked decent for continuation for me without any type of drawdown was Amazon, Berkshire, Google, and FCX. FCX has got a tad bit more downside. Now, I was a little concerned with Square and Uber, to the downside, but they weren't trimmed this week. We may trim next week, versus what we had done in the prior week. Now, looking at NTR intermediate wave 3, from our 2 here. So this is, structurally our longest wave. Then we should get a decent back test, maybe at about $66. But based on the history here, this has been very shallow on the back test, with the exception of this leg here. Even our intermediate wave was a little shallow. So if we have any kind of market strength, this might be one that pops a little bit, because we're going to be right at the 200-day. So we realize it gets above that. It's going to probably immediately push to the 23.6. So we could have a little extension there. On the downside, we could just break down here as well, because it sort of looks like a double top, but this is only a daily chart. We do have some, confirmed high here, but we don't have any kind of divergence. So let's jump over and take a look at Intel. Now, Intel's just been really held up well last week. Now we're getting a sell-off this Sunday night in semis, so we'll really see how well it holds up going into next week. If it holds up well in the next week and you don't have a position in this, I would probably add at that point and take a shot at that intermediate wave 3 at maybe around $41, and we should get a back test from there back to the 23.6. So would be decent to sell maybe 30 puts here. It should be pretty conservative, should work. So of course at that point, make a decision from there. Or if you want to, go out to November and just do right at the money calls, $35. Pay for them. You may not see 80% on those, but you should see 20 to 50% even in this market. All right, let's take a look at Prologis. Now, I like this base because we're going to come out of it and it's really extended compared to any of the prior bases that we followed on this. Nice divergence to drive to a bottom. So our intermediate wave is 139.3, and our intermediate wave 4 would be a back test about 134. So about $12 higher than where we are is that little path. Now, once we get up to our primary wave 3, just about the 382 fib, we got a decent back test there, maybe down to about 130. So just keep that in mind. We're going to see a lot of volatility in these charts. So when you take on your position, maybe do a little smaller lots, and then plan on adding when we get past that 3. Because there's a number of charts that after this downturn, we're going to be trading cycle wave 3s, which tend to be longer periods of time. So that's not going to be, 3 to 6 months like a lot of the positions are that we've been looking at recently. They'll be substantially longer. So it'll take a little more work to keep tabs on those and get us in play. But this is one of those, we have a solid shot at 50% back here at 158. It just flushed right here. Got a nice base. It's just a matter of time, I think, before it does come back. Now, Disney is new this week. Kirk brought this back into the plug and play, after his analysis, thinking that it was pretty much done. It given enough back. High or low, which gave us a second primary wave setup at 85.16. Now we just have a daily trigger on that about 87.72. Now again, scaling in using primary waves. And by the way, we're going to have a seminar on that Wednesday. We'll start at 3:15. I'm going to take questions on MotiveWave first at 3, so you guys are welcome to come and join me. It will be posted both in the free and our members area, so anyone is welcome that would like to go over that. Now, our target 3, intermediate wave 3, is probably around 93, and then we get a little back test up to, right now the count suggests we're going to get way the heck up to about 140. The question is, do we break out above the 200-day, or we stay in a range for a while? Because, we are sort of building that out. Sometimes Disney likes to do that. We had this range here, broke below it. Now we're getting back in this range again, so we need to digest that 200-day a little bit. So if I was going to trade this here off of this low, first of all, I would do half of what I normally would do because of how aggressive that drawdown was off of that wick. Okay, not only that, it's an inside bar on the daily, so that we would look for, continuation as far as to the downside. We got an inside bar here, got a nice little rejection candle below there. Then we broke out and they gave a whoop, boom. And notice this, the vacation of the seller. I mean, they just exited, boom. Everybody took it out on that candle, when we gap, so buyers are taking profits on this pretty doggone quick to the high side. And you can see that with the escalations in the candles. Anytime we get a push, they're selling it. Push, they're selling it. Notice how we're closing a lot on the low side of the candle on this entire leg. And this really has not been as aggressive as this, because obviously this was a bigger drawdown as far as size, lesser drawdown, so there's not as much range there, but we could squeeze out of this right here. Anytime you see a confluence of multiple primary waves, that's positive to the upside. That means we're confirming the base, and we'll see how that plays out. But I would probably sell 85 puts when I enter, 60, 90 days out, just some premium, or I would go right at my 92 to 93, depending on what strikes they have available for 60, 90 days out. I wouldn't go much further than that. You could do November as well, but I would be much tighter towards my strike price. Maybe I would do 90s in November. Only reason is there's no different in buying a November call than buying common shares, just because they're so far on time, you're paying a premium. The only difference is you're not paying $88 a share. You're paying your $5, whatever it is. You've capped your risk. Hey, if it works, you know what your risk is. So you can buy 2 contracts, 1 contract, 50 contracts, whatever is reasonable to your risk is something that you could play around with there and still keep a position on. And then add when it starts working. We get close to that 200 a day. Really, this breakout of this like 94.50 is what's going to be most interesting to us, and that's where we'll probably see most of the upside. But then at the same time, around 105, we probably want to be trimming and then wait for a back test and then decide whether we're going to continue to hold that position. All right, let's look at TDOC. Now, this has been here forever. We've been this flat now, and this flat for forever, right down around the, we're now below the 200-day, right testing the 50-day, and we've got the 8-day right below there. So at some point, I think this does get out. However, I would stay light on my position about half size. That's just my thought. Now, looking at ENVX, now, realize Elliott wave measures our legs in both directions, and it doesn't care whether it's $1 a share or pennies. Really doesn't. So anytime that we're going to break down in a stock that's worth less than $25, it usually gives us a negative share or a negative count, excuse me. And, so take that with a grain of salt. We still have trend support, which is going to come in here down here around $5. So now if Mr. Market wants to save it there, it will, and the count will flip and we'll head up and it'll become some kind of a flat. Because realize even with this kind of a descending triangle look, which is one thing I don't like, we also had a lower low on price. So it's sort of not really invalidates a descending triangle, but it's highly unlikely at this point that it would put us right around probably around $2 way the heck out January 26th if we get a base based on trend support down there, and it would extend way the heck out there. So just keep in mind this might be lengthy. So if you're in it, sell covered calls or trim. But I would limit how much I would trim. This is one of Kirk's conviction trades. He does believe this is going to come out based on the micro thesis. So keep that in mind as well. All right, EPR. We really haven't gotten anything except for the sell itself, so I want to see what happens down here around 8-day support, or whether or not the 23.6 fib holds. Because realize there's crossroads in every Elliott wave count. So, and what I mean by crossroads, at these wave intersections, they're crossroads. It's going to decide whether that was enough. That exhausted the buyers. There are no buyers. Boom, it's gone. Well, at what point do the buyers come back? Well, we know now. $10. EPR, they get real interested. $10 is way the heck down there. So gives us a primary wave setup short. Now we've got the daily trigger on that of 45.88. It has not rolled over for the weekly. I realize this is a weekly chart and though it's slendering, we probably won't get across on the weekly until we're closer to $40 is my thought. So, that's sort of how I would manage that. But outside of that, we have many symbols that are in the middle of nowhere or no man's land. Now, on Wednesday's Zoom meeting, I'm there. I'm going to start trying to do that every Wednesday after the close. so I can take questions on charts that you have, and go really drill down on anything that you want to look at. And we'll commit to 30, 45 minutes, an hour if need be. If there's much stuff that people want me to cover, we'll do that. So, but that's what I have for this week, folks. Great trading. Until next time.